Testing. Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room. Live streaming from TikTok. We have fast market conditions here in precious metals. If we take a look at just the board for a minute here, we're getting a lot of volatility in the gold market. 1795.60, last up 390. The silver market has gone up to 1727.15. It's up about 20 cents. Copper is down slightly. And we have a friendly tone on the precious metals derivatives. What I would like to do here on this particular segment is to take a look at some of the ways to trade the VCPMI. I'm looking at getting fast market conditions here in precious metals, so bear with me here if I'm looking at the board. I do have some positions on the long side, and we are hedged as of yesterday. We did take some profits off the table. And why don't we do this? Why don't we just go right into the market here and take a look and see what's happening here, because we seem to be getting some volatility in the precious metals and silver. So let's take a look here for real trading. What we're looking at. We're looking at a target in gold of 1806, which is the sell one level. This is the daily information, 1806 to 1819. These are your targets for the day. For silver, you're looking at 2748 to 2793 as the sell one and sell two targets for the day. Bitcoin, we have a little bit of a sell-off on Bitcoin here, down about 246 or 5.25%, but we want to keep an eye on this as it moves into buying territory, which is the area in blue that we describe. And coin is extremely oversold into buying area of blue. You have Nugget at up 160. This is a bullish double X ETF, up 2.63%, 6682, up 166. So these are the instruments that we trade in order to avoid margin calls. Basically, we day trade the futures as day trades, and occasionally we carry a position overnight, depending upon your profile, basically. And I think what I believe is one of the best aspects of these instruments, particularly derivatives, is that, you know, even though you go into a market here like gold, and it looks like we're entering fast market conditions here. I'm sorry, I want to focus on the market here for a minute. The 1808, 1806 is the ideal target that we've been actually recommending in order to complete this pattern here that is moving into a harmonic area of resistance. Targets on the daily is 1806. $18.08, 1809. Are the targets for today. What you want to look at is, if you're looking at the left of the chart, it's 1806. 1806 is the sell one level for today, and you're looking at the sell two level weekly of 1806. This is a perfect harmonic alignment, and right above it, you're looking at the monthly 1809. Now, this is acting like a magnet in terms of targets. Okay. And what we want to see is pretty much the action of the market into this area. If it has the buying power, if the buyers are able to take out all the offers, that being done up here, then it's going to reflect on the price reaching the target of 1806. What we want to see is, upon reaching the target of 1806, that is the completion of the pattern of this previous pattern, which is a bullish trend momentum. And the actual high probability trigger signal will come in from these levels or very near close by these levels here. If you use a 10% margin of error, I think you're looking at pretty close to the 1800 area. So this is a critical area. We have recommended our traders to begin to hedge, to begin to lock in profits as of yesterday into this level of what the AI of the VCPMI identifies as the distribution of supply area, where the probabilities mathematically run into 95% that if you're going to see selling, and this is no guarantee, this is telling you mathematically the market has reached the extreme above the mean, above the average price, daily, weekly, and monthly. And this is where you can expect sellers to come in, supply to come in. That's why the AI identifies this area as distribution of supply. Expects high probability mathematically that this area could attract sellers. So we watch and see, let the market take us, let the market dictate the supply and demand up here. But I'm prepared, I'm pretty comfortable where I am. We have not eliminated the upside potential in our positions, but we are synthesized and we are hedged without eliminating the upside potential. So it looks like gold, and let's take a look at silver now. The silver market has completed the weekly target of 27.21. And we're getting supply. This is what the AI identifies. Now, on this bar, the target is completed, and at 7:15, which is in about 5 minutes, the end of the 15-minute bar, it would activate a short trigger. What I would like to do on this segment here is to share with you the methodology, basically, that we use in the application of the VCPMI for the benefit of those I would say young traders, inexperienced traders, and intermediate traders. The methodology that we're looking at basically to get to the most advanced or intermediate to advanced aspect of the code basically is that once these pivot points are produced, and what I'm sharing with you and I'm going to break down with you is the components that make up the VCPMI automated algorithm. The composition is a perfect structure of 5 Fibonacci levels. And within these levels, sorry about that. The algorithm identifies these levels mathematically by identifying them with color. And it pretty much gives you a structure of the 5 levels. It gives you an average price, and it gives you 2 extremes above and 2 extremes below. The average price is a 50-50 standard deviation. The sell 1 level, weekly or daily, is a 50-90 standard deviation. And the sell 2 level is a 50-95 standard deviation relative to the implied volatility of the average price or the mean. And that essentially means that as you take a look at the price here at 27.24, it has completed the weekly target of 27.21, which is a 95% probability now mathematically that upon the market confirming on the second bar, not the first bar, on this bar, you take profits from the previous direction. If you don't have futures because it's above the average, then obviously if you follow the methodology that we use in accumulating assets is by accumulating assets in stocks derivatives that we can carry. So even though the VCPMI can be used as a GPS for trading, depending upon your self-directed profile, you can use this to trade and accumulate futures. You can do options, you can do stocks, ETFs, you can do any type of derivative under the futures contract or the sector, for example, that you're concentrating on. Now, this signal here was activated from the blue level that you see here, obviously. It came down to 25.74.50, and that was the weekly, the buy 1 level of the 360-day cycle of 25.85. So it was a pretty significant level of support and buy signal that upon confirmation here of this previous sell-off that you saw taking place, it completed the target and it reverted back up above to activate a buy trigger, a buy signal. And automatically activating the buy signal, it gave you the targets above. The levels above are the targets. Now, your protective level initially is a close below this level of 25.85. That is the most conservative stop. We also recommend to use a hard dollar stop based on your profile, and you can always use the close of the day, the week, or the session time frame that you're using. as a initial stop. Do not use a straight stops. The only time that I recommend using a straight stop is when you enter a profitable position, as it did here. So the signal was activated at 25.8750. 25.85 was your stop, and your targets automatically are activated above. In this case, it was the weekly 26.75. So the market began to move up. Now you can begin to use a straight stop to lock in the profit. The market runs up. And it completes the targets initially. It tests again the trend momentum by closing below the average weekly, and it pretty much gives you a bit of a conflicting signal because the weekly average is telling you that the price trend momentum is bearish and the target is below right away at 25.85. And you can see the market coming down here, activating a price trend momentum, a bearish price trend momentum, and trading above it again, giving an initially false signal, negating that, and coming back down again until finally the last test of this level, which never closed below. So you're still on the long side. If you kept the position without a trailing stop, it activated another buy signal here. And you can see the target was completed by reaching the average price. So now let's take a look at the TradeStation platform, which is the robot that basically produces these signals automatically. And you can see the supply is coming into the market a little bit as expected. So let's just continue for a second here to watch the market. Stay hedged, synthesized. I think we're beginning to get some supply come into the market here. You can see a little more clear on my Thinkorswim platform here. The levels that we use, and I put them all on one chart because this is my trading chart. This is where I can incorporate all of the pivot levels, you might say, that I'm trading, and this gives me a pretty good idea where I can find the harmonic relationship on between the trends. So we're looking at sell 1806, daily target, monthly 1809, weekly 1806. So this is a major area of harmonic alignment, as I said, and it is a pretty strong ceiling of resistance to overcome. Now, if we do close above it, this resistance will become support for a higher fractal in price. So we got to see what the market does if it gets there. The other harmonic alignment that we're looking at is in that 1786, 88 area, which combines basically the daily and the weekly. But being up here in red, once again, the AI just makes you aware that this is an area of distribution of supply, and this is where you can expect supply to come into the market once again. So here's where you want to be on the defensive. The next level of harmonic alignment is 1773, 71, and right down into the daily 1753, 52, 58. So what the VCPMI does for you, self-directed trader, is simply to give you a perspective view of targets for you to trade. And when we talk about the market, trading the market, we talk about trading the market, not trading the rumor, not trading Reddit, not trading the short squeeze rhetoric that's out there. As you can see, the market in the metals markets is doing completely the opposite of the sentiment of what everybody else out there is doing. Talking about the internet is saturated with silver short squeeze. And I think it's a euphoria that has been awakened by technology that caught certain players by surprise, for sure. But as long as I've been around, I'm not so sure that it will have any real significant impact in the market. That's my opinion. The market will do, particularly in the metals, it will go when it wants to go, when it's ready to go. Not when everybody out there is putting out propaganda and rumors about short squeezes, even though it may be a real situation developing or already, we're experiencing those shortages. But the reality is that, again, the market will go when it wants to go. And, the market is anticipating, particularly by making a high of 2089 last year, that there was some damage done, some serious damage done. But back in August, the market went ahead of itself. And now, since then, wanted to see what is the real damage. And so discounting that, the market corrected, and it's been correcting for 7 months, longer than anybody expected. But it's within the 9-month cycle completion that we're looking at for the beginning of the third leg. So the market is doing what it has to do, regardless of any sentiment out there. And what you want to do is trade the market instead of the sentiment. There are many pundits out there with tremendous intelligence, information, research, data, and the market is doing the opposite. What does that tell you? You know, you have to look at that anomaly. And so I would say to you that the market is not yet ready to make the move that everybody's expecting, because everybody's expecting it. Being a trader for a little while, I want to sell into that rally. I want to fade into that rally. And if you've been around and you're part of my group here and my audience, you can appreciate what fading into the rally means. That means that basically the market has reached a level where mathematically it's telling you, economically it's telling you, it's reached an overbought condition. And in order to go higher or accelerate higher, the fundamentals need to change outside of all of these rumors that already have been factored in the market. One of the comments that I can make you is that prior to the Reddit short squeeze rumor that happened back in early February, the market was moving on its own in the right direction. And the only thing that this, you might say, anomaly did, called Reddit, to the market, is it skewed its natural frequency, you might say, and the momentum that it was moving on, and expedited the target a lot sooner. And we got up to 30, 39 on the silver market, and obviously we've been in a in a consolidation since. You can see here the silver market already has activated a short trigger. As I said to you earlier, expect supplies to come in. So if you had longs coming in here, you got a short trigger activating in silver here at 27.13. 98 last. That was a fast trade. And obviously, this is the confirmation here. This is what I prepare my subscribers and my traders in my live trading room. The target automatically is at 26.67 below. Very clear. It went short 27.13. The stop was 21. So that was an 8-cent stop. Now, as the market comes down, you can trail your stop. And you're already locking in a small profit if you hold on to it. Trail your stop as the market comes down. The worst thing is that it'll stop you out of break even if you want to hold on. Now, if you're doing multiples, use a $300 target initially on the first contract and trail your stop on the balance and, continue to trail that balance until you meet your target or you get stopped out. The silver market seems to be leading this reversion. I am not recommending to buy up here. The VCPMI does not recommend to buy up here, but it recommends that if you're long from 1754, you start to unload some of the profits at the extreme above the mean. We trade mean reversion trading, and this is what mean reversion trading means. Basically, we trade the mean reversion. We buy the extreme below the mean, and we sell the extreme above the mean. And we integrate the daily, weekly, monthly levels to identify the harmonic alignment and the most optimal relationship on all of the three trends. We're getting more supply in the market here as we get more red bars, so continue to fade the rally as we recommended earlier. It is a quiet market here, and we are beginning to see the supply expected by the VCPMI. What we want to do is allow for the reversion to the mean to unfold, and for the market to take us to the levels identified, basically visually, even in blue. You know, the VCPMI is an incredible tool. When I even teach and coach this, and reverse engineer the components because the intelligence is very complex. It's got the Fibonacci sequences, it's got the Elliott wave principles, of wave count, it's got the vortex mathematics, it's got the pivot points, and the algorithm really has a multidimensional intelligence within this simplistic chart of view. When you look at it, most people say, oh, they're pivot points. They're just pivot points. Pivot points are not colored. They're not activated mathematically. Most of what you see out there is one-dimensional. This gives you a multi-dimensional view by incorporating Fibonacci, Gann, Elliott wave, vortex mathematics, all into one. And what I'm teaching you here is the different individual components that make up the algorithm. So when we get up to cell 1, we're beginning to see the completion of the wave pattern. And the market will actually confirm the beginning of that wave expected by the VCMI. So the intelligence is prospective, and the market is what will validate or negate this intelligence. So I don't need to worry about where the market is going or why it's going or, what got it up here or anything else. I simply take a look at the VCPMI as a GPS. It gives you your levels, your targets, and then the market will do what it's going to do. You can't change that. The market is a random instrument. And the algorithm creates a structure within that randomness that gives you an intelligent way for you to capture profitable levels. That's what you want to do. As a trader, you want to take the highest probability trades. I, as a trader, am looking simply to buy the extreme below the mean, which is, again, the blue level, and, sell the extreme above the mean, and which is what we did here. As we complete this pattern, retested this pattern, this target. So the signal, the weekly signal, has activated a short trigger in silver, and silver is leading the way down. Now gold now is beginning to react to it, but it has not yet activated a bearish trigger point, which will be on a close below 1888. Then you will get both the silver and the gold market on a bearish mode. Once again, everybody, I want to share this with you and invite you to join me on May 11th through the 13th on the Interactive Money Show Virtual Expo, streaming live on May 11th through the 13th, 2021. A bunch of incredible speakers are going to be here, and I'm really honored to be one of the speakers, guest speakers. It's going to be a pretty powerful exhibition here with some of the best names in the business. And we are part of this incredible Money Show Virtual Expo on May 11th through the 13th at 3:40 Eastern Time, which is 12:40 Pacific Standard Time. And we will be discussing basically a GPS for your trading and showing you how we produced this incredible returns last year of 337% return by actually trading live like I'm doing here, sharing with you this incredible intelligence. We've done over 360 live shows daily where I have shared this live intelligence and executed the signals. So for those self-directed individuals that are serious about, making a difference in your bottom line, this is a great trading tool that you can add to your arsenal. It's not the Holy Grail. It's not a guaranteed, but it's changed my life as a trader. And I know that it's changed some people's lives that have actually benefited by the use of the VCPMI. So the difference here, obviously, is that this is for you as a self-directed individual. So it's up to you, depending upon your skill, depending upon your risk and money management experience, to be able to apply this exponentially, because as a trading tool, you can use it on any instrument. We cover over 80 markets in all areas, in all sectors, stocks. I trade actively the metals because of obvious reasons and for personal choices. I think it's the most attuned instrument to be trading with the VCPMI. But it's very effective in other markets as well. It's effective in stocks. Gold mining shares, regular stocks, Netflix, Microsoft. And depending upon, your skill as a trader, then you can formulate a great strategy for you to execute in your portfolio. This is a little more sophisticated in a sense that, depending upon, again, your profile, you can use it not only for day trading very successfully, but you can use it for building an inventory or portfolio, you might say, that you may want to carry, that you may want to build intelligently. Whether it's a diversified portfolio in all the sectors, or simply you choose a sector like I do as a preference to trade gold, silver, and now we're trading in the Bitcoin area as a coin using GBTC Grayscale Investment Trust. We are getting involved into the virtual currency asset world for obvious reasons. So It is a very independent tool. It's a contrarian tool. It's a mathematical tool. You can use it against the sentiment. And I'll tell you, in the best results that I get is when I actually close the door, don't listen to the news, to all the gossip on CNBC, all of that confusive rhetoric, chatter that really has no place in actual trading the market, particularly if you're day trading the market. Very quiet. And we're looking at what basically the market wants to do up here. We're comfortable. We've hedged. We've locked in some really nice profits here on the rally yesterday, and we continue to gain equity on our portfolio here, regardless of this defensive position that I have taken here at this point. So I don't believe we're going to run away from this market, although I could be wrong, and the market always can prove you wrong. But we're prepared for it if it does. But in the meantime, the market looks like it wants to revert, and we want to buy corrections into this reversion if it unfolds, which will be a counterintuitive, so to speak, reversion or swing correction, adjusting to its harmonic levels mathematically, where the values will be identified, and that's in the blue levels. The first target, the average price, obviously, will identify, the average price for that period. And if it does go below that, then we're looking at the market average price to be higher than where the market wants to go, and therefore it will trade below that mean. And those are the levels. Those are the extreme levels that we want to look for and identify. And that's what's called mean reversion trading. Really quiet market here, chopping around now at these levels here into these resistance levels. And so, just stay the course here and just watch the market. Let it come to you. those traders in my Discord trading room, pretty much, if you've been following the signals here, should be pretty comfortable with the hedge that you have on. And so continue to just hold on to that hedge until the market comes down into these blue levels, ideally into that, B2 level, which is the 1753.54. Trading $50, $100 in the gold market is becoming the norm. Where before, $2 or $3 move was a big move. So the volatility has been broken. The benchmark has been broken. We are dealing with uncharted waters pretty much across the board. We've never been in this situation before, and I don't think we're out of the wood, out of the frying pan, so to speak. The market is still calibrating, and we still have to see the economic impact in what the stimulus is going to look like. There are rumors now that Biden is looking at another $4 trillion package of stimulus. So it's pretty amazing to see the amount of debt that we're building, and the idea that interest rates are going to go back up is unthinkable on the face of all this debt. So it really is putting the question of the US dollar reserve currency status, and being the US world reserve currency, also being the world's biggest debtor now, is the issue. How do you reconcile the currency, the strength of the currency, the purchasing power of the currency being the world's reserve currency? So it really is putting the US petrodollar to a test as a fiat currency. And pretty much the general consensus is that the more they produce this stimulus, this free money, it's only eroding the integrity and the intrinsic value of the US dollar. But it's not just here in the United States, it's all over the world. So we're talking about a devaluation of world fiat currencies, which is occurring. And I think it's pretty obvious that our leaders have chosen the path of least resistance, which is the Keynesian philosophy of economics, to pump stimulus into the economy in order to create inflation and economic recovery through inflation. Under normal conditions, I would say, that sounds like a great idea, but we're not dealing with normal conditions. We're coming out of a pandemic into an economy that is broken, into a completely new system. And what we have seen is basically a split of the physical economy and the virtual economy since March of last year. And within a year, the noise about virtual currencies has become so prominent that when you really, really think about, the probabilities are moving greater to the US Feds or the United States Treasury looking at a virtual currency. Chinese government, the yuan, is already into that virtual world. And so the idea obviously, is for central banks to move into a virtual economy. Ideally, if they can migrate us into a virtual economy completely, this physical economy with this tremendous debt will become old news. We'll be moving into a virtual economy with no debt, with a new currency. Now, ideally, if that virtual currency was to be backed by some kind of an asset like gold, silver, or a combination of currencies, I believe that it would become a more credible new currency in this environment that we're trying to migrate the old physical economy with a virtual economy. These are exciting times, and I think these times are times that you can use to change your life. It's providing you the opportunity for you to do that. Thank you again for the time to be able to share this with you, and I hope to see you next time, my friend. Be well. You take care. See you soon.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.
Folks, John Najarian here with Steve Collegian.